Okay, Dan, on the back half of the show, as I mentioned, we're going to talk a little bit about what's going on from a macro perspective affecting logistics and shipping. And the first thing I want to talk about is tariffs. Of course, we've had several rounds. Yeah, I know it's big issues here, but we've had several rounds of tariffs this year. The most recent news that we got was an agreement between President Trump and President Xi of China to kind of declare a ceasefire in what has been an ongoing trade spat between the countries that would delay increases on tariffs, which are currently 10%, which were set to increase to 25% January 1st. It's going to delay that tariff increase for at least 90 days to continue kind of negotiations with that trade dispute. As a result of these tariffs, we've really seen a surging. We would have expected to see the trade deficit between the U.S. and China to shrink as a result of tariffs. Actually, we have seen it surge in a very significant way over the past few months. In October, it hit the highest it had ever been at $43.1 billion. And part of that has come because this expectation for tariffs to increase on January 1st to 25% has incentivized a lot of exporters in China and a lot of importers in the United States to front load their shipments to beat that increase in tariffs. Now that we're not seeing that increase, what does that mean for U.S. retailers and for logistics providers, across the world?
It's a problem. So you bought a lot of, shovels. You bought a lot of shovels at $10 because you didn't want to pay $12 for them. Now they might not cost $12. And you've tied up all that money and your shovels, let's hope they sell, but what if you overordered? What if your stockpile and demand doesn't? So you're going to have some dead inventory. You're going to have some inventory that maybe they make up a little bit because they sell it after the holiday season at a good price. But people hedged against uncertainty, and there's still a ton of uncertainty.
Yeah, I mean, we still don't know if when 90 days come around that these aren't going to get jacked up again. And then another factor to think about, Dan, too, is that it wasn't just one retailer doing this. It's large numbers of U.S. retailers all looking to get their goods to market before this January 1st increase, while there's only a limited supply of logistics infrastructure to make that happen. So I'm sure they paid a little bit higher rates to make that stuff get here that ended up not being necessary.
So when you run a smaller retailer, which as we've talked about, I ran a toy store that did a couple $1 million in sales a year. You have to make your Christmas decisions in the summer. So you were staking out your inventory, your Legos, your stuff that's going to sell. So if you decided this is not a big problem at Walmart or Target. So let's say I banked on, I'm going to buy a bunch of Han Solo Star Wars Legos for my toy store, and then the movie tanks. That's what's kind of happening here. Stores that don't normally have to make big bets in advance had to make big bets in advance. So if those bets were right, it won't matter. It'll probably all even out in terms of the pricing. But the reality is that's not how it happens. If you're Walmart, you can make a relatively small bet for Walmart and then just order more. Instead, they are chock full of stuff, and we will probably see a slowdown, a pretty big slowdown in ordering in the first quarter.
Right, Dan, because I mean, this inventory that we had built up is going to have to roll off, before we can really make a meaningful new investments in inventory.
And without being too political, you can say 90 days, but I think we're at a time where every one of us in this space wakes up in the morning and checks the news to make sure nothing crazy happened. War with Canada, invaded Mexico, who knows? So that as a buyer, as a national or a global retail chain, that has to weigh very heavily on every decision you make.
Right. As you mentioned, Dan, just businesses really don't like uncertainty. We see that in the stock market. As uncertainty rises, we see more volatility. And we see that in these logistics infrastructures. And just as kind of an aside, this is not a problem that is unique to the United States. We're seeing a very similar problem in Britain ahead of Brexit, where they have had a massive demand increase for storage facilities in anticipation of Brexit disrupting a lot of the trading relationships in that region. And so we've seen retailers over there stockpile on inventory and stockpile on storage there. So, and it creates a difficult situation for businesses.
You're getting a 1-2 punch here because you have all this inventory that you also have all the logistics and the increased trucking of the season. So moving all this stuff around is more expensive. It would be cheaper to order stuff for delivery February 2nd than to get it December 2nd. Right. So you're adding to the cost, and some items you can price higher. Some items consumers are only going to pay what they're willing to pay. So if Amazon holds the line and paper towels are $3.99, you're not going to get $5.99 at Walmart for them. It's a terrible example. Nobody knows what paper towels cost.
It's okay, Dan. I think what we want listeners to take away here from this tariff is that yes, it is great news that we're getting a delay in the increase of these tariffs. It's gonna probably be good for consumers, and that they're not going to pay higher rates than they would have in the past. However, businesses took steps assuming that these things were going to be in place. They realized some expenses they did not have to prepare for these circumstances, and the premium they paid for goods to get them here quicker in anticipation of these tariffs is extra money they're not going to get back. I know I've heard on some of our other podcasts talking about, when weather comes through and restaurants don't get sales, those sales aren't going to come back. The same way, paying for these goods to get to market, you're not going to get that back in margins. So it's something you think about in the context of tariffs and in the context of shipping in general.
I think as an investor, as you look at these companies, you really want to look at same-store sales. An increase of sales. You're not going to look at cost of goods sold because it's an anomaly. We are not going to have this uncertainty forever. At some point, we're going to sort out the tariffs. We're going to create some sort of... Now, there's other instability. At times in the past, gas prices have created pricing instability. But this is a real wild card that you probably have to back out some of this expense when you look at the health of an actual company.